Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, December 18th, 2009. Well, we have a mixed day on Wall Street today with the NASDAQ very strong on the back of Research in Motion's earnings and Oracle's earnings. Now, I'll take a quick look at that and we'll discuss quickly on the Research in Motion trade. Now, the interesting thing about Research in Motion, folks, is it was a no-brainer that they were going to try to push Research in Motion back underneath 70. Now, it gapped up today close to 71.50 or so on the day, but the key is you have to remember today's options expiration. And I'm sure there's a ton of calls with a strike price of $70 that the big boy, the institutions, do not want to pay out. Therefore, what they will do is they will purposely push it down to try and get it below there and have it close right on 70 or just below $70 so that those calls, those options expire worthless today. Very important to understand that, folks. And I called that out in the chat room today to our premium subscribers and gave that to them right away on the open, saying there's a good possibility that you will see Research in Motion come back below $70. And sure enough, that's exactly what has happened. Here's the gap up right here, and look at this. Move all the way down, and right here's $70. And again, you're hovering right here. Current price on Research in Motion right at this point is $69.82. So you can see that you're hovering just below $70, which is exactly what I had predicted this morning. And again, you just have to understand the way options work, folks. Options are a big boys game. All right, little boys buy them, or little amateurs buy the options, and the big boys try to push them around. They're the ones selling them to you guys out there that are going to actually try to maneuver it so they close out of your in the money range. So again, they're trying to close it so it expires worthless essentially. Now again, the other couple things that are going on, you see Oracle having a nice pop today as well, up about $1.43, and you can see right there on Oracle trading at around $24.33. Got almost to 25. You can guarantee they're not going to let that close above 25 today. Way too much money at risk there. But again, you can see it hovering right down here. Be interesting to see if it even closes below 24 to try and negate all those option contracts that were at that strike price. And again, these are just little tidbits that you want to understand. I'm all about telling you guys all the no nonsense without the Wall Street type hype, and that's exactly what I'm trying to enlighten you on here overall. Now, as I mentioned, the markets are hovering to the mixed level here. The NASDAQ is up about 20 points. The Dow is down about 3 points. And the S&P is up about 2.75. You can see the spiders are trading down just a little bit on the day here after coming down into some major master levels here that I want to cover. Number one, you had to be looking right here at the double bottom from yesterday to understand that that would be a key level to look for. Sure enough, the market gaps just above it. Or opens basically flat here, pushes down right into it, pierces it, and closes above. Pierces it, gap, pushes back up, closes above. Again, tests it. 1, 2, 3, 4, 5 times it tests it. Finally, on the 6th time, it collapses. And that's what you have to remember. Remember the doorway theory. The doorway theory states that if you have a door in front of you, you can run against that door and hammer it, run your body into it 1 time, 2 times, 3 times. If you do it enough, eventually that door is going to break down. Same thing works with the market here in regards to the trend lines. And you can see a 1 hit, a 2 hit, a 3 hit, a 4 hit, 5 hits, and finally it breaks down. The market collapses lower here, going all the way to the Great Wall of China lower level. Now, the Great Wall of China lower level has been a master level that we've given to our premium subscribers for quite some time now. Sure enough, you can see a 1 candle bounce off of that. It pauses, bounces up, then cuts right through it, all the way down to this purple trend line at 109.30. 109.25 to 109.30 is an extremely nice level here of support. Sure enough, the market gets a bounce off of it, comes back, retests it, and then the volume starts to lighten up. You can see the volume sloping down here a little bit, and again into the later sessions of the day. And once options kind of get taken care of in the morning session, oftentimes you will have that volume lighten up very much so. We're not even at 100 million yet, and it's closing in on 130 p.m. Eastern Time. So again, very light volume in the afternoon session here in the early afternoon. I do anticipate that it will lighten up into the 3:30 time frame. Then you'll probably have a pickup in volume from 3:30 to 4 and right after the close as options get taken care of. There'll be some wacky trading. And again, Options X is a very wacky week, folks, and it's been a fantastic week. In fact, the volatility this week has surpassed the volatility of any week over the last really month or so. And that's been amazing, folks, because what you've seen is some great intraday volatility. You've seen some great moves up and down. We started the week out with an up move, then we reversed it on Tuesday, then we went up on Wednesday, then a big fall on Thursday, and now a nice little kind of flattish day on Friday ending the week. But the volatility is back, folks. You got to get in on this market now. They're setting up for some major moves coming in January, and the patterns are showing us exactly where that market is going to go, and we are alerting our premium subscribers in the research center to it. But nonetheless, you can see the market floating up here in the afternoon session. All right, you're just getting back above that 20. You're consolidating now. That slightly bullish consolidation. You may make a move up into this white trend line, which is also the 50 moving average. That is right at 110.10ish, 110.10ish, 110.05 right here. That would equal the lows from yesterday as well, so you know that's going to be good resistance if it does pop into there. It's a two-level portion, and what I mean by that is there's two levels there that's going to be key resistance. Not only the double bottom white trend line, but you also have the 50 moving average right at that point as well. So keep an eye on that on the upside. Wouldn't shock me to see this market trade up into that. The dollar, interestingly enough, pushed up early, and that's why we saw this market tank. And since it topped out, the dollar has come down significantly. Sure enough, take a look at the UUP chart here. Here's your high push on the dollar. You went all the way up, and then since then, look at the move down on the dollar. Dollar's actually back towards the flat line on the day, just slightly positive, and you can see that the UUP has come right back in, and that's the exact opposite, right? The markets went like this today. That's exactly what the markets have done. You can see it's totally inverse to the market here with what the dollar is doing. Now, some great calls, folks. Number one, we highlighted a major level on the GLD. Major level was highlighted on the GLD yesterday on the daily chart to our premium subscribers. I told them, wait. If you're going to buy, you want to buy at this point. I'm going to draw the trend line in for you and give you guys the exact level right here. All right, by connecting these lows. Now, every amateur out there bought right here. That was the wrong buy entry. I gave to the premium subscribers this point by connecting and understanding trend line analysis and doing calculations. This trend line was the key. From this low, connected to this low through this point, right to that point. We closed right there. You got to pick it up. I had the subscribers alerted that that was the pickup point. And then sure enough, from that point, folks, look at the bounce on the GLD today. Huge bounce on the GLD. We went as high as 109.50. The target has been achieved on that bounce. A one-day swing trade for our premium subscribers, equaling $1.50 or so on the upside for the GLD. A very, very easy trade. No stress. You really were never outside of the money. That was a beautiful trade, folks. Well done. All right. So again, that's a nice little play. And understand trend line analysis. All the amateurs buying it right here are now just getting back to even. All of us here at In the Money Stocks, in the money beautifully, taking profits and maximizing profits into the holidays. All right. So that was one of the nice calls. In addition, I wanted to touch base on a couple other things to go over. We also talked about the USO. USO, the buy entry signal was given right here, and look at the move up on the USO. Hit target today. I'd given the target about 1 week ago where you'd expect this to go, and it would be right back to revisiting this point right here from this pivot low to this gap fill. And look at where the high of today was on the USO. Look at that right there, folks. Beautiful hit. So that trigger has been done. That trade completed as well. These are all swing trades that were given out in the research center, folks, and we've maximized profit beautifully on that as well. So well done. A couple other things going back to the spiders, folks. I want you just to be aware of one or two other things. I won't go over the daily. That's for our premium subscribers at night. But you can see the type of calls that are given out here and the success rate. Again, we pride ourselves on being 80 to 90% success rate, higher than anyone else out there, including most of the hedge funds and money managers. Way better odds here. Now, again, as I said, if you inch up into this point, you're going to watch for resistance right there. That's going to be your resistance point downside. You'll have support at the 20 and the Great Wall, and then ultimately double bottom. If you get through this 50 moving average, see this trend line slanting? That will be resistance. It's also coinciding with the Great Wall of China to the upside. Have a wonderful rest of the day, folks. Join the Research Center. It is amazing stuff. Also, one other thing I wanted to mention. The hidden gems from last month, soaring right now, all right, continues to rip higher. Look at this move on the hidden gems, guys. I continue to give you guys the #1 small cap trades out there for all of you to see. Sure enough, look at this move. All right, all the way topped out right here at 199. This still has more to go too. The target ultimately is 225 or so, but just look at that type of move from basically the 140 to 150 level now, all the way upwards of 199. We're talking now nearing that 30% plus gain just in about a month's time, and it should go even higher to about the 50% mark return. That continues to be the way the hidden gems, SKBI, DDS, you name it, all the ones we've done over the last 10 months or so have all been winners in the range of anywhere from 50% to 500% returns. Unbelievable. Be ready for next month, by the way, folks. I'm debating on whether or not giving a special, possibly 2 hidden gems next month in January. One put out early in the month, one put out mid-month. I'll decide if I want to do that as a special for the new year and kick off the 2010 year with some extra profits for everyone in the Research Center. Take care, folks. Have a wonderful day.